Stocks trade in a band ahead of the US CPI print later this evening and the Independence Day holiday tomorrow. The IT stocks eke out gains, but industrials and power are the big laggards. Mid-caps are underperforming. The Supreme Court allows state governments to collect past dues on mining from April of 2005 in the form of royalty and tax. IT, however, directs states to not levy interest or penalties on the past dues and collect them in a staggered manner over 12 years. The move can be a big blow for mining companies. MotoCorp skids after high material costs dent earnings even as the demand outlook remains positive, but Apollo Hospitals rises despite an in-line performance on the promise of improved margins going forward. Vedanta is looking to sell 11 crore shares or 2.6% of its near 65% stake in Hindustan Zinc via an offer for sale. The transaction can fetch Vedanta over 6,000 crore rupees, which shareholders expect will translate into a hefty dividend. And the Enforcement Directorate quizzed Mohit Burman last week and recorded his statements on alleged money laundering in the Religare Enterprises open offer matter. The development casts a shadow on the proposed offer. Arun, welcome to Business Lunch here on CNBC TV18. I'm Hormuz Fatakia bringing to you all the latest updates this afternoon. Let's take a look at how the markets are faring. It's a recovery from the lows of the day. The Nifty is now almost 100 points off the day's low, which was around 24,100. It took support from those levels, and we've seen a bit of an uptick in the last few minutes of trade, heading towards that mark of 24,200 as we speak. But of course, it's a big last few hours of the trading session. We head into a holiday tomorrow. It's also the weekly expiry of the Nifty Bank, and considering the fact that it is a holiday tomorrow, it is the weekly expiry of the Nifty as well. So there will be some action towards the close of the session. The Nifty Bank, though, continues to remain sluggish around that, still failing to hold on to that mark of 50,000 on the upside. 49,700, remember, is a very important level because it has not closed below that level since the 4th of June. So that is the day, of course, of the Lok Sabha election results day. So 49,700, a key level to watch on the Nifty Bank. What's leading the gains, though, is IT, and almost every IT heavyweight, be it TCS, Infosys or HCL Tech, are contributing to the gains on the upside in today's session, and that is what is keeping the Nifty afloat. TCS now at the highest point of the day, 2.5% higher, as is HCL Tech, now 2% higher there as well, and Infosys also contributing to the gains. What's not doing well, though, are metal companies, and that's after that Supreme Court verdict on the taxation bid, and most of the metal companies are selling off in today's session, which is a major setback, and they have allowed these companies, be it Tata Steel is the one that is the biggest impact that we have had on these companies, be it Tata Steel, Coal India, NMDC, all saw a bit of selling pressure in today's session, and they have recovered slightly from the lows of the day. But this is where we begin the show with, because Nigel is now joining in to explain how would all of this impact these stocks. Nigel.
Well, that's right. The metal index has taken a sharp knock as the Supreme Court has allowed states to collect the past dues in the form of royalty and taxes from April 2005. Well, the only relief is that the tax arrears can be paid over 12 years, and that's starting April 2026, without interest or penalties for the prior periods. Now, following the judgment, the states can now generate additional revenues in the form of taxes on mining activities and on the land that's used to conduct these activities. Let's move to the stock focus then, and the stock impact. The biggest loser is Tata Steel, as it has provisioned 17,300 crores as a contingent liability against the claims by state of Odisha if applied retrospectively. This is what's happened, right? Now, this 17,300 crores, it amounts to nearly 10% of the current market cap. But keep in mind, the stock has been weak post the Q1 FY25 results, when they did give out this number of around 17,300 crores. Hindalco, well, they spoke to us here at CNBC TV18, and they said if the taxes are levied retrospectively, then it's unlikely to affect them, as they do not have any kind of pending claims.
The contingent liability is something that has been on our books for the last many years. So every year, if you look at the annual report, it has always been carried. So it's not anything fresh. I think we thought it was good practice for us to be transparent about that. But having said that, the impact is far more than Tata Steel, and I think the impact is on power cost, because coal prices will go up. Impact is on iron ore, impact is on bauxite. So there is a larger impact across the economy, and that's a larger concern. On an ongoing basis, that what in the past the state had planned to tax, I think the impact would be about 1,500 crores a year. But honestly, we are waiting for more clarity on the the ask as well, because the laws were not notified in some of the states too, and so there's a lot of work which still needs to be done before we get to some specific numbers.
I think on the retrospective bit, because that can only happen if you have been served a demand. So we do not see any exposure on the retrospective bit. On the prospective part, it certainly we will be in the same boat as most of our mining compatriots, because if the state increase their royalties, then that will add to the cost of the mining. And hence, our cost structures will go up and ultimately the consumer will pay. So I hope that the increase in royalties are done in a more thoughtful manner is the only thing I can say.
We have to wait for Supreme Court's decision whether it will be retrospective or prospective. As far as we are concerned, we don't have much on any side unless some new taxes or new cess comes up. So our books are clean that way. As far as whether it's a state government or central government, everybody has to ensure that economic activities happen in a very productive manner, and nobody would like to kill the goose that lays the eggs, right? So it's a matter of time. I'm sure every government will judge it in a very, very matured manner. It's not only us, entire mining sector, including government-owned mining companies, will also be affected by any adverse judgment which does not put economic criteria ahead of just tax collection.
Well, we also got a reaction coming in from Rakesh Arora, who said that the companies with exposure to Odisha, Jharkhand as well as Tamil Nadu, they'll have to bear the brunt. He also said that the total estimate for overdue cess is about 2 lakh crore rupees, of which the PSUs alone account for around 60,000 crores. He also added that there might be some kind of leeway that could possibly come about for PSUs by some states. Besides mining companies, well, he believes that cement companies as well that have exposure to Tamil Nadu in particular, they could get impacted. And those companies could include the likes of India Cements, that's now taken over by UltraTech Cement, as well as Ramco Cements.
One is obviously Odisha, where Tata Steel mines are. The other is Jharkhand. And the third one is probably Tamil Nadu, because this whole thing, emerged from a case which India Cement had against the government of Tamil Nadu, where Tamil Nadu government had put some cess on limestone mining. So I think all the companies who have mining, assets in these three states are going to be hit quite badly by this retrospective, tax which Supreme Court has allowed. Total estimate for this kind of cess which is overdue, some industry analysts have put it at around 2 lakh crore, and in the Supreme Court, one of the Solicitor General had said that for the PSU companies itself, the impact is 60,000 crore. So we are talking about big numbers here.
Well, Phillip Capital's note says that all captive mines will be impacted, and they have quantified the impact at 2 to 6% on steel companies' market capitalization, while for aluminium companies, they believe the impact can be marginal at just 1 to around 2%. They added that the stock price correction presents a buying opportunity on select stocks, which include JSW Steel, JSPL, and SAIL, while they say that Tata Steel is the most effective from the cash flow perspective, followed by Hindustan Zinc as well as Vedanta. For now, Tata Steel is the biggest loser, but we'll wait for clarity on whether PSUs get some kind of leeway, particularly Coal India, since higher taxes will impact power cost ultimately. Also, prospectively, which states will levy taxes and what is the quantum? That's something that the street will look forward to.
Nigel, thanks a lot for that very detailed explanation of all of that has been happening on the mining tax case. Time for a short break here on Business Lunch. But before we do that, here's a quick programming note. Global investor, author and columnist Ruchir Sharma in his latest book argues how a more restrained government in India has been generating faster growth. He also talks about India's stock market performance versus the rest of the world, but highlights a few critical flaws in his latest book, What Went Wrong with Capitalism. To know more, tune in to CNBC TV18 for a freewheeling chat on global markets and the Indian economy later this evening at 6 p.m. Welcome back. Time for an exclusive now. The former RBI governor in an Independence Day special told CNBC TV18 that the next step of reforms for PSU banks is to make their boards independent. The former RBI governor C. Rangarajan added that they should be board run. Now let's listen into a chunk of that conversation.
No, I think the most important point is that several steps were taken to introduce and to initiate a competitive system in the banking system. In the final analysis, it is competition that will finally lead to efficiency in the system. And that attempt was taken care of by allowing new private sector banks into the banking industry.
Yes.
It's by time. And as a result of it, I think we do have a situation in which almost 30% of the banking system is now in the private sector. So we really need to ensure that this competitive system does remain. And we really have to ensure that the public sector banks, in order to survive and grow, need to be very competitive. But you were asking about the governance and so on. I think the most important thing is that the board of directors and how they are nominated and how they are selected is a key thing. In the final analysis, the management of a bank rests with the board of directors.
Yes.
And therefore, the key thing that I would really recommend is ensure a proper system of selection of people to the board of directors and make the board of directors as a whole responsible for the functioning of the banking system. And that, I think, is a critical variable in making the banking system more efficient.
Your point is taken, sir. I think that's what Dr. Reddy also argued in 2000 and later on the PJ Nayak committee in 2013, that bringing under the Companies Act, the board gets more powerful, they get independent directors, and maybe that will introduce the governance element. Also, the government can't use PSU banks for their schemes like Mudra, etc., which ties them down and leaves private sector banks a little freer. So I will, time permitting, ask you more about the banking system, but you also wrote in the Hindu about how we should chase our new goal of a Viksit Bharat, a developed India, by 2047. What would you say should be the first 2 or 3 major policy changes we need to do?
First of all, I think in order to be a developed country, our per capita income has to move from the current level of something like $2,500 to $13,000. And this requires, according to the calculations made by several, on some assumptions regarding the price level, inflation, and the exchange rate, we need to grow at between 6 and 7%, but perhaps closer to 7%. This requires that the gross fixed capital formation rate, or the investment rate, let us say, has to be above 35% if we assume an incremental capital output ratio of 5:1.
Yeah.
I think the incremental capital output ratio in recent period has been around 5. Okay. Therefore, the first thing that we really need to do is that we ensure that the investment rate in the country remains at 35% of GDP. And that is critical if we really want to become a developed country.
C. Rangarajan there in an exclusive conversation with Lata Venkatesh of CNBC TV18. Now moving on then, sources have told CNBC TV18 that the Income Tax Department has undertaken an enhanced tax scrutiny of real estate investments made by high net worth individuals, or HNIs, abroad. Timsy is joining us with more details. Timsy, what are your sources telling you?
Well, that's right. What sources are telling us that the real estate investments by HNIs outside India is currently under IT scanner. The Income Tax Department has undertaken enhanced tax scrutiny of real estate investments made by these HNIs abroad. To be precise, IT Department has issued thousands of notices seeking information of assets that are held abroad, and they are being done through surveys. IT Department, these surveys are actually revealing that there's a sudden rise in real estate transactions by Indian HNIs in Switzerland and Portugal. IT Department has, through this drive, targeted the undisclosed foreign assets and incomes that have been held abroad. IT Department has sought more disclosures on foreign real estate assets that are being held by these HNIs, and IT Department currently is conducting these surveys under Section 133A. Now, coming out to what these investigations have revealed, well, yes, recent investigations have uncovered that there's a sudden rise in number of HNIs holding immovable assets abroad. The availability of properties at prices are significantly lower than similar properties in India. There is a massive influx of multinational companies into India, which has led to old business houses selling their stakes, leading to wealth generation. HNIs find foreign investment opportunities more attractive than those in India, and thus IT Department has asked Field Formation to widen the scrutiny, seek more disclosures of assets without any time limitation. So let's see what this entire drive actually culminates into. How much of assets does IT Department is able to uncover through this drive of surveys? Back to you.
Interesting, Timsy, but stay on, because sources have also told you that the ED has issued summons to Dabur's Mohit Burman in the Religare case. Tell us more on that regard.
Well, yes, as you've rightly mentioned, that what we are picking up from sources that the Enforcement Directorate in Mumbai has issued summons to Mohit Burman of Dabur. These summons were issued for asking him to come and physically be present before the ED office in Mumbai last week, and statements have been recorded. So let's see what these statements and further investigation leads to. But yes, this summon was regarding the Burmans getting their investments and looking at their part, which is currently ongoing in part of the probe that ED is doing in the Religare open offer deal. Remember, this was based on the FIR registered by Mumbai Police. So let's see what happens finally once the investigation ends and what these statements actually lead to. Back to you.
Timsy, thanks a lot for bringing us both of those updates. Time for a short break. Up next, the government hospitals in the national capital continue their strike over the rape and murder of a doctor in Kolkata. We'll get you more on that after this short break. Stay tuned. Back on the other side. Welcome back. Now, government hospitals and members of the Federation of All India Medical Association continued their strike in the national capital in the rape and murder case of the Kolkata doctor, demanding a central protection law. Now, earlier, the Federation of Resident Doctors Association had called off their strike after meeting the Union Minister JP Nadda yesterday. Now, Shireen Elizabeth gets us up to speed with the latest developments.
Today is the third day and the Resident Doctors Association protest is continuing. Remember, on the first day, FODA had in fact called for a strike in several hospitals in the national capital. Around 11 such government hospitals in the national capital were undergoing strike. Now, last night, after FODA representatives met the Union Health Minister JP Nadda, an assurance was given to them that the entire security system for the healthcare staff will be in fact boosted up and there will in fact be stepped up. Now what we are seeing is that the strike was called off by FODA, but today FIMA has decided that they will continue with their protest. So behind me are the representatives from Resident Doctor Association and also from FIMA that are continuing with their protest. And remember, the demand right now is, of course, yesterday the demand was that there should be CBI investigation after the Calcutta High Court has ordered that the matter should in fact be taken by the CBI. that demand has in fact been fulfilled. But right now, the focus of these resident doctors who are standing here in solidarity and in protest is that there needs to be a Central Protection Act that needs to be implemented. So that is why this protest is in fact happening at RML, and this is not just the scene at RML Hospital, but in AIIMS and several such government hospitals in the national capital are going through this similar sort of strike. And under this strike, the elective services have been affected, whereas the emergency services is running smoothly.
Shreya and Elizabeth there with the latest updates. But with that, is a wrap on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.